And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like below. If you've not yet done so, please subscribe to both the podcast and to the YouTube channel. And if you think somebody's going to find this interesting, you can go ahead and hit the share button below as well and share it with them. So, people are asking me, what do you think of the Trump tariffs? And I have an opinion, but you know what? It's irrelevant because what's done has been done. And President Trump and his economic advisors didn't ask me. Believe it or not, they didn't say, Mr. Katzman, what do you think of the tariff policy? What would you do to improve trade balances that the U.S. has worldwide? And I would have told them what I think of the whole issue, but because they did not call me, it doesn't matter. What matters is what you should do as an investor now that it is a fact that there are tariffs and that the market is dropped. Okay? You can whine all you want. It's bad policy, it's great policy. It doesn't matter. It is what it is. And now you've got to deal with it. Okay? Certainly the recent, very recent, because it's like hours, you can count it, right? Market volatility is tough for people, right? It's not fun watching your money, lose in a matter of weeks, nearly 20% of its value, right? Between 15 and 20%. It's not a lot of fun. But investors totally need to remember that this is something that happens. It can be because of tariffs. It can become because of a pandemic. It can be because of banks which are mismanaged and create a crisis. There's all kinds of reasons, right? History is littered with crises that happened where markets dropped. And you know what? We don't even remember them years later because ultimately things get worked out and markets get back to where they were, right? Corporations will one way or another adjust, right? If it's just a negotiation tool and at the end of the day, very quickly, tariffs get standardized and are dropped, or they're not. Companies are going to figure out a way to make money one way or another. So I'm not worried over time that the market will, statistically, things very well may recover. Obviously, past performance is no future indication of stock market performance. But there are other things that you should do now. We often get lazy, I would say, when markets move higher. It's easy when markets get higher, right? Everybody's a genius. So you might make 15% one year, make 40% one year, but one way or another, it's easy, right? Just autopilot and let it rip. When things go down, all of a sudden, it's like, right? Panic sets in. Oh my God, right? So here are a few things that you can do on the financial side to get yourself back on track. The first thing I think you should do is, revisit your goals and needs, revisit your financial plan. Where do you want to be, right? Do you need money in cash? Are you approaching retirement? And if you, just let things run and now all of a sudden you're panicked because you're, 20% of your nest egg has been wiped out, right? You don't have any savings. You don't have anything in short-term savings. You just put it all into the market because we were all a little bit greedy. Well, now is the time to figure out, what are my goals and what are my needs? And as such, then you should have an appropriate portfolio allocated to achieve whatever it is you're setting out to try to accomplish, right? So if you might need the money in a couple of years, you have no business. We've said this a lot of times, right? And this, it fell on deaf ears. We've said this all the time, right? But if you're going to be invested in the market, you've got to be prepared to lose money. And if you need the money in a year or two, this kind of thing happens. And it happens with regularity. And you don't want to be on the wrong side of history here and say, my money, I don't need my money right now. I'll need it in a year from now. I'm going to buy an apartment and I'm counting on all, and then I'll whack, 20% of it drops. You don't want that, right? So now's the time to redo that financial plan and get allocated correctly. It's a good idea to do an estate plan. One of the things I like to do, right? I know it's customary on Wall Street to do what's called tax loss harvesting, right? Where you have losses and you use them, you realize those losses in order to offset gains that you may have in your portfolio. I like doing that throughout the year. I don't like to wait until, October, November, December. But if you can do it in April, because you've got a bunch of losers in your portfolio, so more power to you. Take those losses now. right? And then, you can offset and then reset cost bases higher. There's a lot that can be gained by being sort of smart in terms of the tax. I'm not giving tax advice, but in terms of you might have, a lot of money in some of those high-flying tech stocks, which have dropped, and you might have a lot of losses in other companies which have gotten whacked, right? So you can actually, use those losses to offset some of the gains and rebalance your portfolio, right? You might want to move away from individual stocks, or you might have such large positions in some stocks that you want to just take some money off the table. Now is a great time for that. If you've got cash available, again, I don't know when the market's going to bottom out. It might be tomorrow. It might be a year or two from now. I have no idea, but I do know that you're buying the market right now, even on a discount, right? If we were to tell you that your local supermarket across the board, right, a 20% off sale on everything, well, and certain goods will have 50% off, right? The meat section has 50% off, right? There's gonna be lines around the block. Well, the same thing should be with the market, right? You're buying the market now. Anybody who invests now, and again, we don't know, maybe it'll be a 30% discount in a week from now. Who knows? But because we don't know, you can be happy that you're buying the market, which traditionally moves higher, at such a steep discount. That's great for long-term investors. And then I would say, which leads into the fact you should probably think long-term, right? Like I've said a gazillion times, and even I think twice already, if you're going to invest in stocks, if you're going to have allocation to the stock market, you have to have a long-term horizon. So forget what's going on now. It's not fun, but don't get caught up in the news reports, and it's all for clickbait and shocking headlines, and 401ks are getting destroyed. They're not getting destroyed. Nothing is happening. Markets go down. Markets went up a lot. They're coming back a little bit. Regardless of what's going on with the tariffs, markets were probably a little bit overvalued. So just finding the equilibrium again. This stuff happens regularly, and people lose sight of it. But that happens all the time. Last thing, if you're allocated correctly and you have a long-term horizon, just stay the course. Don't panic. Enjoy life, do the things, that you want to do, and realize, because you've been through this before, just a couple of years ago, you were doing 2022, you went through this, and 2020 you went through this, 2015 you went through this, 2008, 2009 you went through this, 2000 and 2001 you went through this, right? These are things that happen all the time, 1987, right? All the time. So just focus on the long term, don't panic, and stay the course, okay? It's not fun, but you can do it. You've been tuning into the Aaron Katzman Show. We speak about your life, your money, and your investments. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. Thanks so much for tuning in, and we'll speak to you soon.